Building a new home is a big deal, to say the absolute least. There's the cost of construction and the materials, the architect fees, the cost of permits, and the expense of utilities and infrastructure. You also have to buy the lot to build on, of course, as well. And that's what I want to zero in on today's video. Building your dream home starts with finding the perfect piece of land, but the cost of land can often feel like a massive obstacle, especially if you've never had to build or built a home from the ground up before. So for example, here in Southern California, you could easily spend several hundreds of thousands of dollars, heck, even millions for a simple 1 acre lot, depending upon the location. So before you even have a single 2x4 on the site, your bank account is already going to take a big hit. But what if I told you you can minimize the price of land without compromising on your dream location? Well, I've got news for you. There are several ways to reduce the cost of land that go beyond, transcend far beyond negotiating the sale price. So with that said, let's dive into and talk about different ways that you can save money. First off, let's start off with low down payment land loans. Now, most people think traditional loans when it comes to buying land, but you don't have to go the conventional route to save money up front. In fact, there are loans specifically designed to help you save on the down payment. Now, one of the most valuable options out there is the USDA Rural Development Loan. Now, if the land that you're looking at is in a rural area, this might be the golden ticket. See, these loans are government backed and can offer you the ability to buy the land with little or no down payment. Not only that, the USDA loans don't require private mortgage insurance or PMI, which means you can save even more money. This is especially a good option if you plan to build a primary residence in a rural location. Up next, there's the VHA Construction to Permanent Loan, which is a great choice when you're combining land purchase and the home construction in a single shot. Now, with this loan, you can often get away with as little as 3.5% down payment, and once your home is built, the loan converts into a standard mortgage. The results? Well, one loan, one payment, no extra hassle. Now, if you're like me and you're a veteran or you're still active duty, there is a fantastic option in the form of VA construction loan. Now, these loans offer no down payment on the land and the home construction. And once the home is built, it converts it into a permanent VA mortgage. So if you qualify, this can really be a powerful tool to save money and reduce upfront costs. Now, while on topic, here's a question for you. At the end of the day, do you think homeowners today have it harder than previous generations when it comes to affording land and be able to build a home? Let me know down in the comments down below. Now let's talk about something I mentioned a moment ago. PMI. Now, this is a topic that really doesn't get discussed when buying land often, and for very good reasons. In the world of land loans, PMI is usually, it's not a factor. Unlike traditional home loans, land loans tend to have higher interest rates and shorter repayment periods, so PMI just doesn't make sense for lenders. Plus, since the land itself isn't providing immediate value like a house would, lenders choose to mitigate risk other ways. So for example, land loans often come with higher down payments, typically 20 to even as high as 50%, which is a lot to say the least. But still, without PMI, there are some savings that you can enjoy when you're making your monthly land loan payments. Now, if you're willing to think outside the box, seller refinancing might be a great way to cut down on some upfront costs. So instead of going through a bank, you deal directly with the seller who acts as the lender. Now, this can result in more flexible terms and potential a smaller down payment. Now, the seller might even offer a balloon payment schedule where the larger payments are due later on, which is going to help you reserve funds up front to pay for all the construction costs. If you have a solid financial plan and a solid credit profile, seller financing can be a smart, cost-effective way to go, provided the seller is willing to entertain the idea, of course, of being the lender. Now, here's something to consider as well. When you're shopping for land, consider looking for properties with existing improvements. Land that already has utilities in place, such as well, the septic system, and access to electricity is usually going to be less expensive to develop. Plus, improved land tends to have better financing options since lenders view it as being less risky. You'll save the cost of installing all these utilities yourself, and you might even have more available land options in areas where construction is booming. Now, the cost of infrastructure like water and sewer lines, electricity service, gas lines, and so forth varies greatly from one area to the next, but it's reasonable to assume that you are going to save thousands, if not tens of thousands of dollars if these systems are already in place. Plus, if the infrastructure is in place, you don't have to wait for the utilities to be run. Time is money when you're building a house, so the time savings with existing utilities can save you even more money. If you already own a property with a decent amount of equity, you might want to explore using equity to finance the purchase of your new land. Now, this is called leveraging your land or home equity as collateral. Not only could this eliminate the need for a down payment, but it may also allow you to secure a lower interest rate. But remember, using equity does put your existing property at risk. The last thing that you want to do is use your current property to buy the land and lose both because you couldn't make the payments. Needless to say, make sure you got a solid plan in place before taking this route. And another option to consider is partnering directly with a builder. Now, some builders offer finance packages that combine the cost of the land and the construction into one single loan. Now, this can reduce the down payment requirements and make the whole process smoother, since you'll just have one payment that you have to deal with. Additionally, builders are often familiar with the financing process, which can help secure a better deal and ensure the home gets built on time and, more importantly, within budget, which is exactly what you want. Now, here's something I want you to keep in mind. Depending upon where you're located, there may be state or local programs available to help you if you're a first-time land buyer or building a primary residence. Now, these programs might offer grants, low-interest loans, or down payment assistance that can significantly reduce your initial costs. It's really worth checking your local government or regional housing agency to see what might be available in your area. Even if you're not using the seller financing, there is still going to be room for negotiating with the seller. So, for example, in a buyer's market, you may be able to ask the seller to reduce the price, or at the very least, cover some of the closing costs. They might even be more open to the idea if the lot has been sitting on the market for any period of time. Now, for those of you who own a home with substantial equity, a home equity line of credit, HELOC, could be a great way to secure funds for your land purchase. Now, a HELOC can offer lower interest rates than traditional personal loan. HELOCs can also provide quick access to cash for buying land as well, and you don't have to wait for those long approvals. Again, have a solid plan in place for using HELOC funds. Since you're using equity in your home as your line of credit, again, failing to pay, the HELOC could result in losing the property. And lastly, there's an option of lease-to-own arrangements. Now, if the seller is open to the idea, you can lease the land for a period of time, and with the rent payments going towards the actual purchase price, this is going to allow you to spread out the costs and give you time to secure financing or improve your financial situation before committing to the full purchase. But here's a bit of advice to keep in mind here. Just be sure to understand the terms of the lease and the final purchase price before entering into this kind of arrangement. So, for example, here are a few things that you need to consider. Some lease-to-own agreements require an upfront option fee, which is a non-refundable fee that can give you the right to purchase the land at the end of the lease term. So be sure, or be clear rather, on how much this fee is, whether it's credited towards your purchase price, and if it's refundable under any circumstances. Like any lease, a lease-to-own agreement may require a security deposit. So understand how much this deposit is, what it covers, and what are the conditions in which it's refundable when you decide to purchase the land. Understand who's responsible for maintaining the land during the lease. So are you required to maintain the lot? So for example, mowing or clearing out debris, or is that the responsibility of the landowner? And if you want to start building right away, you're going to need to understand whether or not you have the right to begin construction during the lease period, or if certain restrictions apply. Now, some lease-to-own agreements might allow you to improve the property, while others may limit your ability to alter the land. So review the consequences, and if you fail to make your timely lease payments, are you going to lose the money that you've already paid? So understanding the penalties for not fulfilling your lease obligations and how it could affect your ability to purchase the land. And if you decide not to exercise your option to purchase, or if you miss the purchase deadline, understand the consequences. Some agreements might allow you to renegotiate, while others could result in you lose your option to purchase, and the land could be sold to somebody else. So which method is right for you? Needless to say, there are a variety of ways to reduce the cost of land when you're looking to build a house. Now with the right approach, you can save on the upfront cost of the land, allowing you to focus your funds on what really matters, which is building the home that you've always wanted. But the right approach for one person might not be the right approach for another. Now that being the case, it's important for you to learn all that you can about all the options that we've discussed here, so therefore you can make an informed decision for your specific needs. Now, I hope this video has been helpful and inspires you to pursue your dream of buying land to build a home. Remember, building a home takes a lot of time, a lot of energy and patience, but the reward in living in your dream home makes the process well worth it. All right, friends, and that's going to be it for this video. And actually, one final question here before we go shutting off the cameras. And let's be real, how much sacrifice would you be willing to make to build your dream home? Would you live in a smaller house, delay your retirement, or even relocate to another state to make it happen? Let me know in the comments below. But friends, that's all I have here for you today. Now, with years of experience in this market and as a veteran, I know what it takes to navigate the complexity of buying and selling a home. So my goal here is to make this process as seamless and stress-free as possible for you. So if you have any questions or are ready to take the next step, feel free to reach out to me. I'm here to help. So with that said, I will see you in the next video.